Today we're diving deep into one of Dubai's most promising emerging communities, the Valley by Emaar. This isn't just another suburban real estate project, it's a data-backed opportunity designed by the biggest developer in the region, aligning perfectly with Dubai's current market dynamics, lifestyle shifts, and long-term growth strategy. Let's break it down into three parts: the developer's vision, the market context, and the investment case, including the risks. My name is Quinton and you are watching my YouTube channel. If you are looking to purchase a home in Dubai, whether it's this project or another, give me a call or drop me a WhatsApp. My number will be given on the screen. Also, make sure to subscribe so you don't miss out on future launches and market insights. Let's get to it. First, we have Emaar's vision and development strength. Emaar has long been a symbol of Dubai's real estate credibility. Since 2002, they've delivered over 72,000 residential units across the Emirate. As of 2024, they hold a sales backlog of over 74 billion dirhams. This is revenue from sold properties still under construction, a strong indication of both demand and financial stability. In the first half of 2025 alone, Emaar's development achieved over 46 billion dirhams in property sales, a 46% increase compared to the previous year. That's a growth trajectory even seasoned investors pay attention to. The Valley, launched as part of Emaar's next generation suburban communities, reflects a strategic response to lifestyle trends. Buyers are seeking greenery, space, wellness, and a sense of community, all without paying the premium of downtown or marina locations. It's located along the Dubai-Al Ain Road, just 25 minutes from downtown Dubai, but far enough to offer lower density, lower noise, and a stronger sense of space and nature. Second, Dubai's market context with strong fundamentals. To understand why the Valley is strategically important, let's look at Dubai's broader real estate context. As of late 2024, Dubai's residential property market recorded a 27.5% year-on-year growth in values. Villas and townhouses, the exact product offered in the Valley, have outperformed apartments with growth rates touching 30% annually in certain communities. And this isn't speculation. Emaar alone recorded 70 billion in sales across 2024, up 72% year-on-year. That's not demand in theory, that's real money moving into Dubai real estate. Dubai's appeal is increasing globally due to investor-friendly regulations, golden visas, zero tax income, and lifestyle infrastructure. This is bringing in skilled professionals, high net worth individuals, and families, all seeking quality homes with outdoor space, schools, and connectivity. This demand is translating into consistent capital appreciation and solid rental yields. In master-planned communities on the outskirts of central Dubai, like Arabian Ranches or the Mac Hills, net yields range between 5 and 7%. The Valley is poised to follow a similar trajectory as it matures. Third is why the Valley is a smart investment. The Valley offers several layers of opportunity for both capital appreciation and income generation. First, you're buying into early stage pricing. Many units in the Valley, including 3 and 4 bedroom townhouses and villas, are selling at between 3 million to 4.2 million dirhams, depending on the cluster and configuration. When you compare this to similar products in established areas where prices have already hit 5 to 6 million dirhams, it's clear there's room for price growth. Second, the community is not just homes. It includes retail centers, schools, green spaces, sports villages, and even an urban beach. This matters because communities that provide lifestyle features tend to experience stronger resale demand and tenant retention. Third, if you were to model a conservative investment outlook, let's say capital appreciation of 15% annually over 5 years and rental yields of just 5%, you'd be looking at a total return of well above 100%. In more bullish scenarios, with 20% growth and higher rental demand, your returns could be closer to 25 to 30% per year when compounded. However, these numbers can change over time, so I'm not going to be making any promises. You're not just banking on the unit's price rising. You're buying into community value, infrastructure growth, and a lifestyle that many Dubai residents are now prioritizing. This is especially relevant for young families, first-time buyers, or investors seeking a long-term hold as Dubai's population increases and central areas become more saturated. These outer, greener, better planned neighborhoods will only rise in importance. But what are the risks? As with any investment, you need to weigh potential downsides. One key risk is supply overhang. Dubai has a history of developers launching aggressively when the market is hot. There are concerns from analysts that prices could see a double-digit correction, especially if global macroeconomic conditions tighten or mortgage affordability decreases. However, this would most likely only affect apartments, and it might not even affect Emaar at all due to its quality and brand. Another is infrastructure lag. While Emaar's delivery record is solid, there are always risks with large-scale master plans. Delays in road upgrades, retail delivery, or school openings could affect both end users and satisfactions and rental appeal. Then again, Emaar has always taken good care of incoming problems and worked to resolve them quickly and efficiently. Then there's location consideration. While the valley is close to main roads, it is still outside the central zones. Public transportation isn't as mature there yet, and residents will largely rely on private vehicles. That may affect tenant demand in the short term until infrastructure catches up. But like I said, that's a short-term problem. Finally, market cooling is real. While 2024 was explosive in terms of price growth, many analysts believe that we are entering a period of normalization. Annual price increases may settle at more sustainable rates of 10 to 12% rather than 25 to 30%, highs of recent years. I do have to mention that this would most likely only affect apartments due to townhouses and villas only occupying 15% of Dubai's real estate. And in terms of buyer demand, not stock, around 58% of property buyers were seeking apartments, compared to 42% seeking villas and townhouses as of 2024. Numbers don't lie. That doesn't mean the opportunity is gone, but it does mean investors should use more grounded assumptions and avoid over-leveraging. In conclusion, the Valley by Emaar is a prime example of smart, long-horizon investment. You're backed by a credible developer entering at an early stage prices in a market that is still expanding and in a product category, villas and townhouses, that continues to outperform. You're also aligning with buyer preferences. More space, more nature, more community. Whether you're buying to live, rent, or flip in 3 to 5 years, this project offers strong fundamentals. Just approach it with realism. Know your exit strategy, understand that infrastructure takes time, and remember, the best returns come to those who buy when a community is still being shaped, not when it's already at its peak. That's the kind of opportunity the Valley presents today. Thanks for watching. Interested? Give me a call or drop me a WhatsApp. My number is on the screen, and make sure to subscribe so you don't miss out on future launches. So, let's talk.